Morning from Melbourne. It's a pleasure to be speaking to you at Impact Summit Europe, and I do wish I could be there with you all in person. As the saying goes, we live in interesting times. According to the UN's annual Global Humanitarian Overview, 274 million people will need humanitarian assistance and protection. This is the highest figure in decades. The latest IPCC report gave a stark warning that heat is causing more deaths, more destruction of biodiversity, and warming our oceans. Many of these effects could become irreversible without action. Meanwhile, the COVID-19 pandemic has caused a grave human development crisis, setting us back in our efforts to achieve the UN 2030 agenda. As is most often the case, those that can least afford it are bearing the brunt. While global growth is projected to be 4.9% in 2022, that growth is not evenly shared. Global total net worth reached 431 trillion in 2021, but the debt burden of the world's low-income countries rose 12% to a record $860 billion. External debt stocks of low and middle-income countries combined rose 5.3% to $8.7 trillion. We, the world, are grappling with some of the major crises of our time. The very real and destructive effects of global climate change has been compounded by the devastating effects of the COVID-19 pandemic. Sorry, I'll just say that one again. The very real and destructive effects of climate change has been compounded by the devastating effects of the COVID-19 pandemic. The Ukraine-Russia situation has reminded us that the growing undercurrent of global geopolitical instability carries with it very real, intertwined and increasingly tangible social, economic and environmental costs and risks for us all, risks that markets have largely been ignoring up to now. Sustainability, meeting the needs of the present without compromising the ability of future generations to meet their own needs, backed by megatrends such as climate change, biodiversity loss, population growth and demographic shifts, rising wealth inequality and social instability, is becoming a major business disruptor, exposing risks but also creating opportunities. These megatrends are affecting societies and businesses in an unprecedented way and on a scale we've never experienced before. According to the World Economic Forum, COVID-19 and climate action failure are the two most likely long-term risks to the world economy, with climate action failure the most impactful. The physical damage from climate change alone is estimated between 10 and 20% of global GDP by the end of the century, or 8 to 17 trillion US dollars a year. More than 50% of global GDP depends on high-functioning biodiversity and ecosystem services, and yet we're experiencing biodiversity loss at an accelerating pace, which will only hasten with climate change. The global COVID-19 pandemic has set back progress towards the SDGs by at least a decade, meaning that on our current trajectory, it would be towards the end of this century before the goals could conceivably be achieved. Rising economic inequality is also a constraint on economic growth. An increasing number of consumers want to make choices aligned with their values and are more sustainability aware than previous generations. In today's global economy, markets are the principal means to allocate capital. Therefore, markets are also the principal means for finance to support sustainable economic activity and delivery of the SDGs. As UNDP coined, the purpose of the financial system is to be a facilitator of economic activity in ways which support an inclusive and sustainable real economy. The 2030 Sustainable Development Agenda and SDGs agreed to by all UN member states in 2015 provides the world's roadmap towards a more sustainable and equitable future for all. They have captured the attention and imagination of actors across the economic and financial system, and much progress has been made. But we're not yet on a sustainable path, and we're still a long way from achieving the SDGs. The devastating health, social and economic impacts of an ongoing global pandemic have set the global agenda back and exposed the realities of global inequalities and interdependency between economic, social and environmental outcomes, serving as a harbinger for the looming climate crisis. There is a growing consensus that we need to act, yet at UNDP we observe that there's a significant gap between this growing awareness and tangible actions that will result in better outcomes. Despite the exponential growth in ESG-related investments, over 35 trillion US in 2020, and projected to reach beyond 50 trillion US by 2025, according to Bloomberg Intelligence, we're no closer to achieving the SDGs. The COVID-19 pandemic has increased the annual SDG financing gap to 3.7 trillion in 2020, up from 2.5 trillion in 2019, according to OECD, a drop in the ocean compared to the world's total assets under management. In response to findings from its SDG 2000 index launched in January 2022, Dan Neal, Social Transformation Lead at World Benchmarking Association, said, "Businesses are overall on course to entrench rather than end the social inequalities that pose a global systemic risk, and their inability to put people at the heart of their thinking also undermines efforts to address the risks of climate change and biodiversity loss." So why the disconnect? Our economic system has evolved to maximise financial value and not pay due consideration of the impact it's having on people and planet. It seeks infinite growth and rewards from a finite system. Negative externalities are not adequately priced into the economic system, the dominant system we use to make business and investment decisions and allocate capital. And our perceptions of risk don't fully account for all material externalities, meaning it's unlikely we will address the root causes of undermining sustainability. And markets heavily discount future cash flows, such that impacts on future generations are in effect ignored. In addition, the ESG metrics we're currently collecting are often not fit for purpose. We often measure the wrong things and leave important things out, especially negative impacts and impacts on disadvantaged or underrepresented stakeholder groups. Data disaggregation, for instance by age, gender and race, remains woefully lacking and underutilised. Key insights remain lost in averages. The needs and preferences of underrepresented stakeholders, including women, are not considered. Outcomes continue to be assessed in silos rather than holistically. Also, increasing levels of short-termism and speculation in financial markets is accelerating and exacerbating the disconnect. Taking equity markets as a case in point, in the New York Stock Exchange, after the Second World War, investors held assets on average for 6 years. In 2017, it was 7 months. Today, when including high-frequency trading, the average is a few dozen seconds, high-frequency trading representing 50% of transactions by volume. As a consequence, too much energy seems to be going into preserving current but ultimately unsustainable business models for as long as possible, staying on the merry-go-round until the music just about stops to maximise short-term profits, in the expectation that we can jump off before the house of cards our empires are built on topples over. But increasingly, the systemic risks that lie ahead of us, especially for the world's largest institutional investors, are inescapable, and the only answer is to be part of the solution. So what can we do as an investment community to change course and put us on a more sustainable path? We need to move beyond ESG to sustainability. We need to put sustainability and achieving the SDGs at the heart of business and investment purpose and how value is created. No longer an add-on to what business gets done, but how all business gets done. We need to make sustainability business as usual. The SDGs are the North Star for this much needed change. If the climate change and COVID-19 pandemic has taught us anything in the last few years, it's that we are living in an interconnected world, which is precisely what the 17 SDGs have been designed to illustrate for businesses and investors alike. We also need to work more collaboratively and partner more across the system. No single actor in the system can achieve the SDGs alone. We need governments, private sector, philanthropy and the community sectors all working together to create shared solutions. At SDG Impact, our mission is to help businesses and investors embed sustainability in the SDGs at the core of management systems and decision-making, and direct capital to where it can make the most difference to people and planet. We've designed the Sdg Impact Standards to help organisations put sustainability in the SDGs at the core of their management systems and decision-making. And we're also developing an assurance framework, an Sdg Impact Seal that will set minimum thresholds and an expectation for continued progress towards best practice in line with the Sdg Impact Standards. Because we need to create systems that incentivise and accelerate change. We've also partnered with Duke University to create the Impact Measurement and Management for the SDGs course, which is freely available on the Coursera platform. Released in September 2021, there's already more than 7,500 registrants, and feedback from the participants has been overwhelmingly positive. This course also provides an excellent foundation for organisations wanting to take the next step towards implementing the SDG Impact Standards. Our SDG Investor Maps is a detailed country-level market intelligence tool that identifies SDG investment themes where SDG priorities, government policies and investment needs overlap. It also seeks to redress the global wealth imbalance by channeling private sector capital to where it can make the most difference to people and planet. The maps also identify white spaces where we think there are significant opportunities for development impact, but perhaps insufficient policy priority to crowd in private sector capital. Our UND country offices around the world will take these insights into their policy dialogue discussions with governments. The magnitude of the challenges we face as humanity need action today. We have a unique opportunity to create the new normal and build forward better. There's no reason to see real alignment with the SDGs as anything else than good for business. According to the Business Commission on Sustainable Development, contributing to and achieving the SDGs offer a compelling growth strategy for businesses and for the world economy as a whole. Achieving gender equity alone could increase the size of the global economy by 26%, and $12 trillion annual business opportunity could be unlocked if the SDGs were pursued in just 4 major sectors or investment systems: food and agriculture, cities, energy and materials, and health and wellbeing. Realising the SDGs call for a reimagining of how value is created. It calls for a new currency of trust and integrity that puts sustainability and achievement of the SDGs at the centre, guiding us to make better decisions. Businesses and investors will continue to be profitable in this new paradigm as we build the path to more resilient and inclusive economic models fit for the future. In fact, their future business success and prosperity depends on it. Thank you for your time, and I hope you enjoy the rest of the summit.